Hi, everyone, and welcome to the TimingResearch.com crowd forecast news for January 9th, 2023, new year. First crowd forecast news of the new year, and we are recording this at 1 p.m. Eastern Time, and this is episode number 372. My name is David Kosmeter. I'm the creator of TimingResearch.com, and today I have arranged for Fausto Pugliese to join us again. It's been a little while, so great to have him back. And also Anka Metcalf is with us. And the option professor is back to moderate. So I'm going to go ahead and turn it over to him.
Okay, great. Thanks for the intro here, and great to be with everybody today. We've had a lot of action in the last 48 hours. So we got two great pros to talk about what's been going on and what their views are going forward. Before we get started, let's introduce everybody. So we're going to start out with Anka Metcalf. Anka, for the people that are not familiar with you, a little background on yourself and your company.
First of all, thank you so much, Jim, and thank you, David, for having me here today, and Happy New Year, everybody. My name is Anka Metcalf. I'm the CEO and founder of TradeOutLoud.com, which is a trading education firm that is specialized in educating individuals how to day trade, swing trade, and actively invest in the market, whether it's equities or futures. I've been doing this professionally for over 20 years, and I come with 10 plus years in investment banking. I run a swing trading service for stocks and ETF since 2020. I also run a trading room for futures since 2017. And we do provide, like I said, trading education for stock trading, for day trading, and for investing. I like to specialize in high velocity moves. I don't know if you heard Jim earlier mentioning that this market is tailor-made for the first hour or a couple hours move. So yeah, that's pretty much in a nutshell. You can find me at TradeOutLoud.com.
Yeah, we'll talk a little bit about that trading in the first couple of hours, because today obviously it was tailor-made for it. Fausto Pugliese is back with us again. He's got an outstanding firm that he works with. A little background on yourself and what's going on at your company?
Yeah, no problem. Thanks for having me again. Yeah, my name is Fausto Pugliese, president founder of CyberTrade University. I've been doing this for over 30 years. Can't believe how time flies. I'm one of the original day traders, So's band, as they used to call us. Basically, teach people, thousands of traders around the world. We do all education for some of the top trading firms in the industry, you know, like Thinkorswim, TradeStation, yada, yada, all of them. We run a professional day trading room that I started back in the early 90s, been doing it ever since. We have several instructors that work for us who specialize in coaching, more or less not teaching how to make money, more or less teaching people how to stop losing it. That's really our motto.
Right.
Once you learn how to stop doing that, everything's pretty much easier, but kind of focus on day trading and swing trading, just make your money for the day and then just enjoy life. You know, it's a great job, but you got to know how to play the game. And that's why we're here. We're here to teach you how to do it.
Yeah. And a big thing is risk management, because the gains will take care of themselves, but you got to make sure you watch those things that aren't working so well, right?
Oh my God, that's like you know, that's the biggest problem everyone has. They go out there, they'd like to talk about winners, but don't realize that it's the losers that really put you in trouble. And that's really kind of focus more. And that's why a lot of coaching is very important that we do, and a lot of, you know, kind of working with a good team of traders that do exactly what you're doing. So
do you also you use automation quite a bit, so there's not a lot of emotion in it?
You know, that's a very, you know, it's a great question. You know, that sometimes you have to, if you feel like you're not that disciplined, to go out there and put your limit orders. I mean, obviously, hardest thing to teach someone is more of the greed factor and, you know, the discipline factor. So, you know, when we kind of trade and we teach more on the direct access platforms, you know, and you're using a lot of these ECNs, like, you know, trading on the NASDAQ market, Archipelago, you know, you got to always try to put your limit orders out there and just try to get executed. You got to sell into demand and you got to buy into supply, which is kind of the opposite most people do. Yeah. But it's not about those home runs, it's about those base hits.
Yeah, a lot of people talk about being a liquidity provider. And basically that's what you're kind of saying, is when the market's going crazy on the upside and everybody seems to be buying, somebody's providing liquidity for all those people. And sometimes that's a better way to go than just the way everything is going. Right.
Exactly.
Yeah. What about scheduling time, Fausto? You know, I know, like in Anka's case, she likes to, you know, focus on the first couple of hours with, you know, some of her business. Do you encourage people to, you know, have a scheduled time that they're going to put onto this stuff so that gives them some discipline?
Absolutely. Like we start trading in our room right around 7:30 in the morning Eastern time. People start getting in there because you get program trading that kicks in pre-market around 8 o'clock, 8:30, and 9 o'clock. But that 8 a.m. move is a pretty big one where a lot of program trading kicks in. Now, I know a lot of people might not know they even have access to the pre-market, but there are a lot of trading firms that look forward for people putting orders because their orders won't get executed until the market opens up. So we do a lot of our trades in the pre-market, and depending on your experience, obviously, if you're not that experienced, sometimes the spreads could be a little bit big. But a lot of the stocks that we trade are obviously in a big percentage gainers and losers. They're the most active stocks that you'll see in today. Like we'll talk a little bit about them today. I mean, there's a lot of them that are moving today, like Moderna, and Boyle. There was a couple of good stocks. Some of them, there were a couple of buyouts too. That Bath and Beyond was moving pretty decently in pre-market. But the whole idea is just having that volatility. You can get in out of it. Just make your days pay. That's it.
Yeah. Okay. Well, let's start out with our question of the day on Mondays, which is where do we think the S&P will close on Friday from today's open? Now, today we opened on the cash SPX at 39.10. And obviously we're 27 points above that now about. So where do you think, Anka, we will close on Friday? Will we be higher than 39.10, the same, or lower? And what's your conviction level?
All right. I think that it's going to close at 39.90 to 4,000. And my bias is about 85 to 90%.
Yeah, getting above that 38.75 was a big thing for me. And of course, if the CPI comes out with a big break in it, that could be what lets the dogs out. With regards to Fausto, how are you feeling?
I'm kind of feeling the same way. I mean, after seeing what happened on Friday and see what's going on today, I mean, like I always see that a lot of people like to close out the positions and book their tax losses, whatever it is. Or like, for example, like today, you're starting to see a lot of mergers coming in over this weekend. Now we're going to the new year, but we're getting a little bit of a bull market. I've noticed that too. And I'll be focused right around the same price, right around that 4,000. Yeah.
And, the beginning of the year, every Tom, Dick, and Harry who has a client is telling them to put money to work, right?
Well, they got to book. They got to get their commissions.
Exactly.
I mean, they got them in cash, and they got to make sure they stick in there. So
I don't think it's not coincidental that in December, before the end of the year, we had a nice rally to get the end of the year people in, and now we have the January effect that they want to get done. So I think the bigger risk in this account is probably in February.
Yeah, listen, I was a stockbroker when I first got started. It's how I learned to become a trader. I'm like, I hated it because you were just a glorified salesman. But listen, it's no different than you going to buy a car. And they're like, why they try to always give you the deal like the last day of the month? You know what I mean? It's like the end of the year. They're trying to close out the year, and that's what you have. That's like I just said earlier. There's just so many. I haven't seen so many mergers come out this weekend on a Monday like today.
Yeah. Well, we'll have to see what's going on. And again, like I say, I thought getting above 38.75 was kind of a big thing. And so it did that pretty well. And now it's had us pretty good time. Okay. With regards to what fundamental and technical things are you guys looking at to kind of make you feel like these things are going to happen? Anka, what are you looking at that's making you feel, do you want to share a screen, anything like that? Or?
Of course.
Yeah. We like to put the visual in with the verbal,
Of course. Just hold on a sec. Okay.
And also you can discuss, like I say, a little bit of your methodologies as well, which is nice.
All right. Okay. Can you guys see the screen?
We can see it. Lovely.
All right. So this is the SPX chart, the daily chart, and this is what I'm looking at for this week in particular. But we can also use a higher time horizon, and it's very interesting what I'm seeing in the market because so we have the low here, but the low came in very technical into the 200 SMA. You know how much I love the 200 SMA using the 200 simple moving average. More so, we also had a minor support zone exactly into this area. We had a prior high from 2020, from August 2020, and we pretty much came in and we bounced from a kind of like this area. And then when we came back, we really tested the 200 SMA and this prior pivot for the second time. And it was also so psychological because it came like into the 3,500. So it really loved the whole number area. and then it rotated, it went higher. It also created this downtrend. So to begin with, we had high, we had lower high, we had lower high, we had lower high. So we established a downtrend. But if you take a step back and if you look at the pattern, if you look at the pandemic low and the high that we had earlier in 2021, and actually we had a brand new high in SPX, I believe on January 3rd in 2021. So that was like a year ago. What we're seeing right now is 2022. Okay.
Mhm.
Right. So with the new year. Okay. All right. So if you take a look back and if you see it, right, this is also a very shallow retracement. I know it's very volatile. I mean, look at the size of the candles that we have and the shape of the candles that we have to the left-hand side, and take a look at the right-hand side here. It's like crazy. We have all of these, bottoming tails, topping tails, really solid price action, and the bars are really wide, which means that we have a really large move throughout the trading days, throughout the trading sessions. And we came in to retest this low right here, which would be, let's say, more or less about 50% retracement from the pandemic low. Well, that's not too bad. And in my book, that's pretty good, healthy retracement. Now, there is something happening right now that is super interesting. And you mentioned the base that finally you were looking at a level of SPX breaking above the range that we have been in almost for an entire month. What I really like the fact is that we rotated here, and this was a major move right here, because this is week 1, week 2, week 3 in which we consolidated. You could see this candle, which is a little bit taller, taking out the highs here, and this is last Friday following the numbers that came out. It pushed the price a little bit higher, closing above the 10 EMA, and today we have the continuation higher. I think the big line in the sand is going to be into that 39.90 area that I mentioned earlier, because we may have a little bit of, let's say, cheer of going, following that January effect, and cheer going into that into this trend line again, because it was every single time when we came back down to retest support, every single time we came and retested this this downtrending resistance. But the truth of the matter is that the Dow is actually a lot stronger. So I can show the chart a little bit later on, but I want to wrap this up first. So we do have the technical, let's say, void to go into this trend line. What is very interesting is actually onto the daily chart. Why? Well, because we had a big base over here. As expected, we had the reaction of the 200 simple moving average, and we also had the reaction from the resistance from the high from September, and that was a big deal. The price action was unable to take out those highs. So the price action, once it broke below the range, it wanted to stabilize, and it kind of used this area to stabilize into the whole number again. This is the 3,800 number. So as you can see from this technical pattern, we have this low, which on the weekly is the 200 simple moving average, and it's also a minor support. Minor support only happens in uptrends. That's why when I talked about the weekly and when I talked about the macro look, this is a low, this is a high, this is a 50% retracement. Yeah, I know it's pulling back into a downtrending motion, but still it's holding that, I would say, average of 50%. I didn't use any fibs or anything like that, but 50% is just, kind of like 50% is not even a fib number. It's a measurement from swing high to swing low. What I like here is that we have the bottom, we have a higher low, and we have a higher low. We try to hold this higher low. We couldn't, we broke down. And then again here, this represents right now the new higher low. So we're trying to strive to make higher lows. Well, in my book, if we have a low and 2 higher highs and 2 higher lows, we're really trying to make to change the trend. This is going to be very significant. We already have the confirmation of the second pivot that it has rotated already, and very significant rotation that we had on the weekly chart. So this is very strong and pointing into the change in the trend direction. Now, the big deal is going to be on Friday, because we have earnings that are going to kick in. Yeah.
Oh, the earnings, right? And then on Thursday we got the CPI.
Exactly.
I got a quick question for you though. The Williams percentage is getting a little on the high side, isn't it?
Yes, it can stay in the high side for a relatively long period of time. So here it had again, I like to use it mainly on the weekly rather than the daily, but it could stay into the highs for a very long time. It depends on the trend. So for example, here it stayed for a really long time from November 16th all the way until the pullback. That was in August 30th, 2021, into the core of the move and then back up. So you can see that these coincide with these particular moves right here. So it could stay. So once it's setting onto the trend line, it could stay there for a very, very long period of time. I like to look for divergence when I'm using the Williams percentage.
Right.
So yeah, at this point, it doesn't
Otherwise,
really,
it's not that helpful, really.
yeah, it's not that helpful. Yeah, it's not that helpful at this moment.
Right. Right. All right. Well, that looks pretty good. And Fausto, do you want to share your chart and give a little idea on what you're seeing behind the curtain?
Yeah, sure. Let me get my screen up and running. Sure, we got going on here. All right. So basically, I've been focusing more. I don't really, as a day trader, I don't really use indicators. I kind of like focus more on the high frequencies, the dark pools and stuff like that. So like today, we had a nice little run up in Mara. A lot of the crypto stocks were really running, Coin, and obviously Mara's like being a lot of the blockchain. You can see Mara had a really nice move here from 420 right at the gate and ran from 420. All the way up to about 520. I mean, you do the math. People don't realize that you bought 1,000 shares of that stock.
Yeah, great percentage.
That's $1. That's $1,250,000 salary. So people don't realize it.
Yeah.
No, it goes. But the big thing is, if you notice, it stopped right around here, around this 520 and 550, 510. So the big thing that we kind of use, I don't know if anyone here has ever watched me on NASDAQ, but NASDAQ has me a regular guest at the exchange talking about NASDAQ Book Viewer. And, this is basically what you're looking at is you have like a seat on the exchange. So if you work on the floor and you want to see where all the institutions are, whatever, this is one.
So is this similar to the old specialist book almost?
Yes, very. It's almost like Instinet, The difference is now, like, when we got started, we had to pay a couple of $1 million to have a seat in the New York Stock Exchange. Now you don't have to pay for it. Now it's like $15. So if you look, if you look right here, do I got crayons? Yeah, I do. I got crayons. Yeah. Hold on, just get my crayons out here. I can draw a little bit. So you can see right here. You see 520 right there. There's a 39,000 share seller. Wow. So that guy right there is this right here. So let me move this over so you can see what I'm talking about. That's why it's having a very tough time breaking this resistance. Right. Now, this is just NASDAQ. Now, another big thing that we use too, which is another pretty cool tool. This is called, this is our level 4. So you could see here that Book Viewer, you could see here that this is like more of an aggregated of other exchanges added to more of a chart platform. And you could see we're getting a ladder effect. You could see right here at $4, there was a 74,000 share buyer. And then all of a sudden you could see it bidding up, bidding up, bidding up, bidding up. And now we're starting to hit this resistance levels right around here, around 520. Right. So, the big thing.
And they're hitting it with some volume at that level too, huh?
Exactly. And you got to remember the way things go up. The way things go up and go down, that everyone has to understand is supply and demand. Yeah. So I just kind of focus on, okay, where are the buyers, where are the sellers? I don't try to, our traders don't look at it and try to analyze the stock as in, the book value or anything. We just want to make our days pay, and you're pretty much done. And there's a lot of them like that. We're just looking at Mara. Coinbase did the same thing today. You could see Coin had a really big pop. And what's big about this one is that when we started early this morning around 9:30, right around $36, I mean, this stock ran from 35 up to 39. But the difference between this one, you could see the sellers were getting executed. They constantly got executed. These are big orders. Doesn't sound like a lot, but they're like 3,500, 5,000. But they were getting executed, and it really started building up right around here, around close to the 39. And if I bring up,
and this is a $40 stock, so 5,000 shares on $40 is a decent amount of money.
Right. So that's why it's always like, as traders, it's all about less risk, more reward. We don't care what we trade. We just want to make money. Right. And why I got to go out there and buy 1,000 shares of a $40 stock and risk 40,000 when I could trade $5 and risk only 5,000. That's where people get this misconception where they think you need a lot of money to trade to do this. And I'm like, no, it's like, does it matter what you traded? You made days pay. But anyway, getting back to Coin, you could see right here, as we're working down the NASDAQ exchange, you could see there 200 shares, 500 shares, a little bit more detailed on the data, other than looking on the chart. But we're really looking at these big block orders that we'll see. And when we bring it up over here and we look at Coin, you could see how it's really kind of having a tough time breaking that 39. And because of those big sellers out there. So there were a lot of them out there that were moving. Those were moving today. A lot of Chinese stocks are moving today. A lot of education stocks like EDU, Tao was moving up pretty well. Pretty similar what we're looking at. But every day is, like I said, it's always a new adventure, just finding out.
What about those metals like gold and copper and industrial metals? Well, not how about things like copper and gold and silver? They're going pretty good, aren't they?
Well, I mean, what was it? What's was it POS?
That's one of the weaker ones. I thought. I was thinking more along the lines of maybe I don't know, gold, gold fields, GFI. Anything going on there?
I personally don't trade any of these specific stocks because the problem is that, first of all, if you look GFI, only trade 2 million shares, right? What did it do today? It actually went down. It didn't really move. Right. I mean, it went from 12.20 to 11.10. I mean, I would rather trade. I mean, it might move. It did move back in November when we went from 8 to like 13. Right. Yes, we would trade it. And you know what? It will pop up on our big percentage gainers. But as of right now, if I had to take my money to sit there and trade, if I had to sit at one table versus the other, I'd rather sit right now what's moving. And that would be like, those that are moving today, like the Maras and the Chinese stocks and so on. Now,
how about Bed Bath and Beyond? I mean, that was going bankrupt last week. Is it getting a bid now?
So you can see Bed Bath and Beyond. This is when the guy killed himself. I don't know if you heard about that. He jumped out the window, the CFO. Right. He ran the stock all the way from like 4 here, and the thing came down. It had a good move this morning, but it kind of died. Yeah. It started. You could see here in pre-market, you had this big move right here. And then it kind of died. It really didn't go up as much. And like if I bring up Bed Bath and Beyond and show you what's going on here, like just on NASDAQ, and see what's going on in the exchange, BBBY, you look at all these orders. You could see all these shares, 20,000, 30,000. It's a lot of shares that you're going to be dealing with people in here. You're not going to get that, that 50, 100,000, and everyone else is showing like 200, 300 as equivalent as the other ones that I showed you. But it does move. But today it kind of like died. It lost its momentum.
Yeah. So, those two of them on the thing that I work with is GBTC and ETHE because they're ETFs, and I saw them very much turning last week. Are they getting a lot of action today?
Which one was that again?
ETHE, Ethereum, and GBTC and GBTC.
Yeah. Okay, so the problem with Ethereum, if you look right here, you see it's got no level 2 quotes.
What does that mean?
Okay, so basically it's not on the NASDAQ National. Okay. When you have quotes on here, I can't see who's buying and selling. I can see the time and sales. I can see the chart, but I can't see, you can't see the orders out there. Like for example, I go on NASDAQ, I type it in there. You see there's no data.
Yeah.
So you can't see market makers, you can't see high frequency trades, you can't see Goldman Sachs.
So this works on individual issues, not on ETFs and trust and things like that, right?
Right. Well, there are ETFs that do move. I mean, they're.
No, I'm saying, but do they show up on your bid ask?
Yeah, of course. Like, you look at stocks. I mean, you can see SOXE. They're out there. The SPYs are out there. But like us as day traders, we won't really trade the SPYs because to buy a $392,000 stock, a $992 stock, I'd rather trade. It's all about risk to reward. You know what I mean? Not that they don't move, but there are things that got better percentage movement when you have only 1% move, when you could trade, like I told you, like Tesla today moved pretty nicely. It's up 9%, it's up $10. And, and what's nice about Tesla is, let me show you this, it's pretty cool right here. So Tesla had a huge resistance levels right around here, around 23. Yeah. It was roughly about maybe 50,000 shares. The guy got taken out. And once that guy got taken out, I mean, you could see the lines. Look, see the next biggest resistance levels, 193,000 shares. See, what I try to teach everybody is this. You're seeing the future. You're not seeing the past, right? So if you knew that there was 194,000 share seller at 25, what are you going to do? You're going to go long, or you want to take a profit, or you want to go short? Yeah. So until someone else takes that, it's not going anywhere. And that's really what we kind of focus on. So not only does it apply towards the day trade, it does apply towards the swing trades.
And what about travel, like Carnival Cruise or Royal Caribbean? Aren't they going pretty good? And Delta?
Yeah, you know what? They're making a comeback. A lot of the it's funny. I was actually just shopping for a cruise line just the other day. Now you bring it up.
Yeah.
Yeah, and every time I want to buy something, like if I'm going to Costco or something, I go, like, what's Costco doing today? Whatever it is. Cause
Yeah.
like, cause if I'm doing it, everybody else is doing it. But, you know, with that said, yeah, I mean, they did make a little bit of a move. They still haven't really made that big jump yet. They did have a nice little run up since July, but you know what? It's only up about 2% today. It's not on my big percentage gainers. They've been a little bit better of a swing trade. And you know what? If you do trade these, like CCL, and you trade in at Carnival Cruise, I mean, actually, they are moving pretty nicely today. They are making 52 intraday highs. You could also look at, you know, the airlines, because usually they kind of, airlines and cruise lines kind of work pretty similar if that industry is moving. But yeah, I mean, like they look pretty good. I mean, listen, you just got to pick your weapon like anything else.
What about the thing that I've been jumping in, TEVA, TEVA, another cheapie? I'm trying to just throw some cheapies out there because cheapies can work out very well.
Wait, what is it again?
TEVA. They do.
TIVIA. It's not
yeah.
doing anything. It had a good run up the last couple of days, and I'll show you what happened here. So you could see it. It was good on Friday. You could see how nice it moved on Friday.
Yeah.
There, right there. But it kind of like flatlined. It turned into a little bit more of a swing trade. It didn't back off. You know, you could see how it's holding up pretty strong. And you could probably see here TVA. If I bring up NASDAQ, and just because NASDAQ loads up pretty quickly, you got these 10,000 share buyers out there. You got a lot of sellers out here. You see all the orders out there.
Sure.
Versus the buyers out there. There's 90,000 versus you got over 100,000, but you got a lot more orders out there. It's not really moving too much right now.
It's not been bad for me though. Last couple of weeks, there's for sure.
No, it moved great. Great.
9 to 11 is not something I'm going to turn my nose up. Yeah.
But just keep in mind, you're getting up to a big resistance level up in August, and you're right around there. So it's up to me. I would take a profit.
Yeah, take the money.
Take the money. You can always buy it back. Let somebody else break through it. You know what I mean? You're not going to bust through this thing. You know what I mean? Let somebody else do it.
Yeah.
That's what I was always taught.
All right. Well, let me, and by the way, you have a very, very unique information here, which I think is what separates you from many, because obviously this kind of information is not being given out by everybody. So that's outstanding. So congratulations on that. Yeah.
Well, thanks. I mean, listen, I was a market maker, and that's basically what we look at. We kind of just follow where everyone else is and don't try to analyze the market. And we just kind of more focus on the future. And this is where we were talking about earlier about like people not knowing where to get in and get out of positions, and know how to take losses. Because listen, like there's this big buyer here at 120, right? If this thing goes through 120, you got 146,000 shares out there. If somebody takes him out, you know what, like it or not, if I keep dropping and dropping and dropping, you don't have any buyers till you get here to 118, 115. And that's really where it's going to go, like it or not, you know, unless somebody else is going to show up. So that's what makes
what makes this data very interesting is you're seeing, just like the specialists used to see everything, you're seeing it, and you can see where the gaps are, where the volume is right now, you know?
Right. You're looking at for those gap fills. You're looking at exactly where those orders are, where people already had those defaults. Like you just mentioned earlier to me, you were saying like, would you put a limit order out there? Well, that's what these are.
Yeah.
These are, and by the way, these are real orders. I always get people always ask me, oh, how do I know they're real and this and that? And I always go,
what do they call that? Spiffing or spoofing or something?
First of all, spoofing's illegal. Okay, anyone gets close to spoofing.
But I mean, isn't that having to do with like having orders that don't exist or something like that?
That first of all, if anyone gets caught for spoofing, they get hit with millions and millions of dollars.
Oh yeah, no doubt about it.
Yeah. So like when people talk about that, you know, and they think that's spoofing, I say, listen, why don't you come to my trading room? Let's go buy Tesla at 100 right now that 190,000 shares with your money. You tell me if it's real or not, and see if you get executed. And you'll see how spoofed it is, you know?
All right, let's let Anka get in here. And Anka, you have your favorite children. So why don't you explain some of the ones that you're looking at? Can you share your screen, Anka?
Yeah, just on it.
Because you're a lady who's got ideas. I know that much.
All right. Well, I think that, you know, there was a good opportunity to get in while the market was ranging. And when we had that big opportunity in the SPYs, and we had the great opportunity as well, you know, in the Qs, I think one of the biggest breakouts that we literally had and that I've seen is in but already happened. Like I said, you had to be early.
Yeah.
So if this show would have been last week, that would have been a good starting point for
Yeah.
these moves. But semiconductors were acting really, really well. So let's go here and take a look at this breakout. So again, it had that little, drop, let's say, like brace breakdown, just like the market did, just like the SPX or SPICE or anything else did. So was that breakdown. And then this was the breakout back to the upside into the 209, 210. I mean, take a look at the activity today. It had a low of 210, high at 220 right now, $10 right now, and it's trading into the 10 EMA. I would watch this very carefully and along with the semiconductor stocks, because there were some really great opportunities last week going into this week on semiconductors. So any kind of pullback that could possibly take it to 214 or so, or even back into the 210, and a rotation may take it this time around all the way into the 230. Today, Broadcom, AVGO, had a massive move, massive breakout. So the weekly as well, you could see it on the weekly. You could see it better on the daily because you could see the consolidation a lot more. You could see that it had massive resistance over here just below the 200 SMA. And once it got above the 200 SMA, and again, we're going back into the discussion of the lows and the higher lows and the higher lows and the higher highs. And once it shifts its directional bias, this was the big breakout. And in fact, today it had a beautiful daily rotation that took the price literally by storm, just above the MAs here, punched them into resistance, erased the resistance. Oh, I'm sorry, this was on Friday. So again, today I thought it was a weekly chart for some reason. I don't have a position in AVGO, by the way, but again, right now it's back into resistance, but it's just digesting. So the question comes, like, is this range that happened right into this resistance to the left-hand side, was this the range that is really going to take the price above this bigger chunk of price action? I mean, that would be like a really great question. Again, today we have some really great movers. We had, and all of them are breakouts. I'm going to give one that is just about happening right now, and that is CSCO. CSCO is just consolidating just above the prior resistance, nice area above the 200 SMA. I think it's just starting to move a little bit higher. It still has a lot of room for $50. Once it takes out the 50, and if it will take out the 50, earnings will tell, I think. And I think this is going to be one for earnings and not before that. But I think it has a lot of potential for 52 and 54 for a little bit longer term. I think it's looking very, very good. And I just want to go back to that BBBY that Fausto was showing earlier. I can't believe that stock is $1.
Yeah.
Anka, I go back and I look at some of these stocks, like I bought Carvana, and I'm like, Carvana, if you go back last year, the thing was like almost $400. The thing's down to $4. I mean, like, and everyone makes these big deal about, like, oh, look at, Bitcoin was at like 77,000, it's at 617. I'm like, imagine Bitcoin at 400,000 and now it's at 4,000.
I know.
So it's scary.
What's the symbol for Carvana? Yeah, CBNA. Okay.
CBNA.
Okay.
I mean, that's just one of them. Even Roku. Look at Roku. Roku got crushed.
Yeah.
I mean, like.
Oh yeah.
So that's why you can't hold these positions, and that's what I was just trying to tell you earlier when we were talking about it. Like, you got to learn how to take losses sometimes, because
oh my gosh, yes.
You get in a situation like some of these things, you can't get out of them. You're like, well, I can't sell it now. You know what I mean? Like, that's why you got to teach people how to lose money.
It's not an HODL.
Yeah, it's not. I know it's not.
You know what, Anka, what do you think of INTC? Obviously, it's gone way down. It pays a decent dividend. The P ratio is 4, and they're opening up a big plant in Phoenix. I mean, is there any future to this thing?
Technically speaking, I like it. I like the consolidation, and where I see a consolidation, like my eyes are popping out because I like consolidation, because they're either break out or break down, and you can, juice it up a little bit. And if you see that, hey, it's having a hard time breaking through any kind of first target or resistance, what it is, just put your stop and break even, and you have nothing to lose on it.
Yeah.
But I think it does have, kind of like a good potential. I was watching it earlier on the daily chart, and it was kind of appealing. And I also like it from this standpoint. It could squeeze, I think, to the 20 SMA, to the 200 SMA here, into the $32 to $33. And then this is going to be the big question mark, because if it's going to pop above this, then yeah, I could squeeze a little bit more. I like it. So yeah.
Because I mean, this is one that you get paid a good dividend. And if they do have a future to them, obviously 20 looks a lot better than 25 or whatever. Looks a lot better than whatever it used to be at.
Yeah, for sure. For sure. Yes, I think. And as we're looking into a lot of stocks that have not really engaged into massive breakouts, last year, they're still grinding. PayPal is still, not PayPal, PYPL. Here we go. PayPal is, again, one of these stocks that, it's kind of like, kind of like that Intel, kind of like that. I'm not going to say Carvana, but it's kind of like looking like it wants to squeeze a little bit. This is the weekly. So it's forming a clear double bottom formation. So I think that there is a lot of opportunity in these stocks that have been really beat up. And I think this is part of the January effect, that people may start wanting to, dip their toes. And I mean the big investors, not me and you, right? But, sitting at home and watching, because we don't have that power to lift stocks. But definitely, I think that they may be looking at, say, hey, you know what, PayPal may be, it is a really good, solid company, earnings wise and whatever. We'll see what it's going to do this quarter. And keep in mind that we have just closed the fourth quarter. So all these results are going to come from the fourth quarter. So this is going to be very interesting, because we had a strong holiday season. We had a lot of buying, a lot of PayPal was, PayPal was used, Amazon, Microsoft, Apple. So I think if these numbers are going to be strong, I think that we're heading towards a more bullish Q1, and we should look a little bit more to the upside and not be really focused on shorting all the time. Yeah. And even though, like I said, the daily charts are still struggling with resistance, some of them are not, and some of them are flying higher. Mm-hmm. Even stocks that have been beat up, like Meta, even Nvidia, even Microsoft, or even Amazon, these are stocks that have been beat up, but we're seeing that they're kind of like holding into these supports, into these really kind of like a pandemic low supports, and they're trying to rotate. So they're literally trying to come back. So we'll see what this is going to bring. I think that Amazon is going to be higher for this quarter. We'll see how the earnings are going to be. So far, it's doing a little bit of a squeeze here. So it's kind of interesting. It's kind of interesting, the pattern that they're forming right now.
It seems like the macro, if we went into a recession, the idea of all this cloud investment might go out the window, which I think has hurt Amazon and Microsoft recently. Yeah. So if there's not a real big of the fear of the recession as much, then obviously the cloud spending can come back in, and that's why these guys could bounce back up. I want to do a couple of things before we run out of time here, because we do have earnings coming out Friday. And I was going to say, Anka, do a little analysis on 4 bank stocks, and then I'm going to throw it over to Fausto, who could do analysis a little bit or give some opinion on it. So let's start with JP Morgan, Wells Fargo, Bank of America, and Goldman. Let's see if what those 4 look like.
I read your mind. Okay.
Yep.
JP
the lead
Morgan.
Dogs, the lead dogs,
Yeah, JP Morgan. Well, I am already in the stock at 133. This was my buy, 133.20, and it looks like it really wants to break above this range. Now, this range right here is just into this prior high from 2019.
Right.
So it's going to be very interesting to see if it's going to break the 2019 high, and as well, this little, let's say, pullback buy, let's say bull flag, whatever you want to call it, base, if it's really capable of breaking above and making new highs and higher here. So I think earnings are going to be a catalyst for this. If not, if it breaks below the 200 SMA, I think that, things are going to move south, but it should have pretty good earnings. I don't think, in moments of inflation, banks are thriving. They're not suffering at all.
Yeah.
So I think JP Morgan is good. Citibank as well, not as great as JP Morgan. And by the way, Goldman Sachs is going to lay off like 4,000 people or something like that.
3,200, right?
3,200. Yeah. So that's going to be interesting.
What does GS look like up there?
Yeah, it's just not going to be fun.
Yeah.
So we'll see, because they're reducing costs, so the stock may be doing better because of that. But we'll see. Yeah. So anyways, massive level of support that we're seeing in Citi as well. And again, we have the same technical pattern. We have the higher low. This is the first indication that the pattern may be wanting, and it's really striving to continue a little bit higher. The first target would be into the 50. That's really strong resistance. It breaks 50, it's going to go higher. If it's going to get rejected from 50, I think it's going to go back lower. Wells Fargo,
WFC.
Okay. Yeah. Okay.
We all get a moment.
Yeah. All right. So here we have the support, higher low, and another higher low right here. We have definite a lot of resistance from 45 to about 48 or so. And it's kind of like, we're trying to reverse from this big trend that we had this whole entire year. So we fell apart right here. Now we're trying to change, and we're trying to lift a little bit higher, slower. This was a fast move down. So staircase up, elevator down. So this is exactly what happened here. So really sharp move to the downside. We have a low, we have a higher low, and another higher low right here. So the pattern may be trying to push a little bit higher. I would say that if this, let's say this quarter is going to be able, if Wells Fargo is going to be able to trade above these highs over here, the 48s, 49s, this is going to be conducive of getting into the 50, and a blast 50 is going to try to attempt to go the new high. But again, we're going to see, is there going to be a recession? Is the inflation slowing down? I mean, there are so many factors in here, and what are the earnings results going to be? And then we have Bank of America. I think this is the last bank, the major bank that is going to report. Very similar pattern with Wells Fargo. We have a low, equal low, we have a higher low right here, but in this context, from that elevator down, same context, elevator down, and then perhaps we're going to try to lift a little bit higher here. So staircase to the upside. Again, the big line in the sand is going to be into the $36, $37. We break 37, 37.50. We're going to start climbing higher. Actually, the monthly charts are looking better, and throughout the banks and financials, major timeframes are looking a lot better because they're still holding the uptrend.
Yeah.
So this was, and if you look at
they got good dividends, they got net interest income, so their free cash flow is going to be huge, and their PE ratios are low. So they've got a trifecta of reasons why they should be good. However, that chart does look like at some point people didn't like them.
Yeah, exactly. This is the financial crisis that came 2007, 2008. And this is, the chop and slop that followed in 2009. And this is kind of like the QE that followed. And then we had the 2020, the pandemic low here. We tested at a big technical knot, and then we lifted higher. So we're still trading higher than the pandemic low. And if you look at it, I would say, let's put a fib just a curiosity. But it's trading into the 50% retracement. Literally the bounce of 61.8%. This is very interesting. This is what institutions love, that 61.8%, the long-term investors like. So bottom line, if it trades above this $37, I think it's going to start going higher, but we'll see. There are a lot of factors riding this year. So it's going to be, I would say, a day by day. Even if you're a swing trader, it's going to be a day by day. So it helps if you're a day trader as well and have a good handle on the market. It's going to be one of those years where you have to be hands-on.
Yeah. Yeah. Hey, Fausto, what do you think of these banks?
You know, I honestly, I'm not a fan of the banks. They haven't done anything. You
Yeah.
know, I mean, like, I
But
live
you
here
get a
in New
good, you
York.
got to get a dividend anyway. Yeah.
So what?
I know. No, I'm saying if that's your game.
But you got to make back for the dividend. I could tell you
Yeah.
other stocks that give you better dividend. There's a stock called CSQ. That stock pays you 8% dividend on it, and it pays you every month. Not at the end of the year. Every month it pays you, to cover it. So there are other, and it's a lot cheaper. The banks, I mean, they haven't really gone anywhere. I mean, I live here in New York, and I'll tell you, I mean, I don't know if everybody realizes it. There's a major problem going to New York City. I mean, obviously you see the crime and everything else that's going on,
Yeah.
but
Oh,
like
yeah.
the buildings are 40 to 50% vacant. A lot of these, and what's happening is they raise the taxes so much, they
Mhm.
raise the gas so much that a lot of these banks are not lending money anymore. You know
No.
what I mean? So that kind of like gets me a little nervous. We're talking about this inflation that's going on. I mean, you hear about Goldman Sachs laying people off. I mean, listen, these are the godfather of Wall Street. You don't screw around. They don't lay anybody off. You know what I
Yeah.
mean?
Yeah.
And the people that work there are not working and making, six-figure salaries. These people are making 7, 8-figure salaries. I mean, they're the best of the best, because they get paid for it. But very rarely they do that. So I'm a little nervous. I mean, there's other industries that have been doing pretty well that, like, I like to focus on. If I was going to do any swing trades, I like to focus on the industries that got destroyed, like EV stocks. I mean, like, look what happened
Yeah.
to Tesla.
Yeah.
Look what happened with
And Neo's been coming back, huh?
Neo. ChargePoint had a good move this morning.
Oh, yeah.
CHPT had a
Yeah.
really nice pop. It
Yeah.
ran from like 9 to almost over 10:30 this morning. So I mean, there were a lot of really interesting stocks that are moving. You just got to find them where they're getting. As long as you're buying them at the right price, that's what's key. I don't think you can get
Yeah.
hurt with the banks anymore. Other than God forbid, I mean, if you remember back in the day, the financial crisis. I mean, oh my
Yeah.
God,
Yeah.
that was like talking about crapping in your pants. Like, I mean,
Yeah.
I remember I owned Citibank at $1. You know what I mean?
Yeah.
But
So CNX is an energy company.
which with ChargePoint,
Yeah. No, CNX, the one you mentioned that pays at a monthly.
CSQ.
Oh, CSQ. I'm sorry.
CSQ. There's a few of them. They've been around for, I mean, almost like 20 years. They pay like almost an 8% dividend.
Right.
And I own a lot of shares of this stock. Actually, I got my whole family and everything in it.
Yeah.
It was a great buy when the market crashed a little bit when it went down to 6. But if it doesn't go any, but it pays you every month.
Yeah.
Which is nice about it. So on the
Yeah.
4th, you get your dividend check. And so on. So there are a lot of these kind of stocks out there. So don't always think like, oh, I like G because it pays a dividend. I mean, like, there are some good stocks that pay good dividends.
Well, the dividend pays like you're talking about. That's taking off your principal every time. You know what I mean? As far as, it's reducing your risk. As soon as you got 10 of those, that means you got almost 100% of your capital back, right?
Right. Exactly.
Yeah.
Exactly. And it's just you could compound it over and over again. But there are other stocks like I was laughing when you brought up Carnival Cruise Line. I was looking at them like, wow, that was a good call. That looks like I had a good little move right there. I was going to trade it, and then I saw it kind of hit resistance. I kind of backed off on it. But you just got to see what's going on in the industry. I'll be really careful with certain stocks going into this year, and then obviously going into a presidential election too. But what's going on in New York is not really cool. It's not, doesn't look pretty good.
No.
So
Yeah, you don't have any nurses anymore either, right? The nurses are all walking out, right?
There's a big strike this morning. I mean, like, it's listen, these little things, like, the traders you have to understand is that unfortunately catastrophes for us are big opportunities,
Yeah, exactly.
And they always look like, why are you so negative? I'm like, I'm not negative. I'm positive. I mean, with that news, that's going to help you find things that you could benefit from. I mean, listen, we make money going short. You know what I mean? Like, well, what's wrong with that? I mean, if you're not going to do it, somebody else is going to do it.
Yeah.
You just got to make sure you're on the right side. You're just following the orders and see where else is going. But try not to be, try not to be smarter than the market, because you'll get beat up all the time.
Hey, what are you seeing on DD? I picked it up at $1.50, and it's a ride sharing company in China. And my theory was, once these guys get out of their apartment, somebody's going to need a ride.
Which one was it?
DIY. And it's a ride. It's the Uber of China. And like I say, obviously, if nobody's leaving their apartment, nobody needs a ride, right?
The only thing that doesn't come up on my it doesn't come up on my. I don't see any orders out there.
Oh,
so it's
okay.
not a NASDAQ. It's not a NASDAQ national stock. But by you saying that, there's EDU, There's TAL, TAL.
Okay.
Yeah, these are all Chinese stocks that obviously made a little bit of a comeback. I mean, EDU was a $200 stock. I mean, this thing dropped all the way down to about $2 and had to do a reverse stock split to kind of get it back up to it. I mean, yeah, when
Well, didn't they nationalize TAL, and that's what made it go from 90 down to 0 almost. And maybe they're now going to loosen that up a little bit, because that's their whole thing, is they need growth, and to get growth, they got to relax all of this hardline stuff a little bit, right?
And you'll notice that by seeing how the stock is moving. You know what I mean?
Yeah.
Like one example, like people have realized, I mean, like when the Democrats took over, their big thing was all about the Green New Deal, right? So you would think like all the EV stocks would take off. One of them was like ChargePoint. But look what's happening. It's getting crushed.
Yeah.
It got destroyed. I mean, it was at the highs around like $35, $40. I mean, $40. I mean, it was doing great. Why? I mean, everyone has to have one of these in their house to kind of like charge these cars. But you know, and then you look at Tesla. Tesla was at the highs of 400. Things down to 100. In the past 2 months, it was down almost 75%. It was 300 down to 100. But big support levels at 100. If you look at level 4, there were big buyers at, you know, right around that 100. So you just got to be patient, you know, and get at the right price.
Yeah. Yeah. Well, before we run out of time here, let's spend a little time on what each of you guys do for people, so that when they give you a call, they know exactly what you can kind of provide. Let's start over with Anka. A little bit about, again, some of the different services you have and some of the different things you bring to the table for these guys.
All right. So we do provide trading education for stocks and for futures. This is something that I have specialized in since the inception of Trade Out Loud in 2010. And we do have actually a free webinar that is coming up this Thursday, and it is scheduled for 7 p.m. Eastern. So if you're interested, you could probably see our post on Twitter or Facebook, or you could just head on to our website, and you're going to have like a pop-up. You're going to have like a pop-up window when you log in. Just make sure you just punch in your email address, and this is it. So you could just put your name here, your email address, and we will send you an invitation to our event. It's about how you can create income in 2023 and how you can create your own wealth ecosystem, and also, you know, put some money aside, you know, and start investing. And this may be or may not be the year. We're going to have to wait and see. Like I said, it's kind of like a day-by-day basis, but I do like investing opportunities, and especially in dividend stocks. And if you're interested in our services, we provide a futures trading room. We also provide the stock swing trader, which is alerts for swing trading. We make your life super easy. We do all the work. We analyze the market. You're going to receive every Monday an email from us with the video, with the market outlook, trades. We're going to analyze the trades that we have just closed. We also have an active portfolio where we update our clients every single time, you know, there's something that you know, needs to be updated in your trade. We also provide private Twitter feed for that. We also have a private Twitter feed and a Discord room for the futures trading room as well. We provide performance portfolio as well. And within the performance portfolio, provide you in any program that you join, we provide you with the share size calculator, with the position size calculator if you're trading futures, which is a little bit more harder to do than for stocks, with a little bit of a different approach. So we provide a hand by hand. So all of these programs are for individuals that are just starting out to real professional traders. We do have some hedge funds that are into our program as well, into the stock trader as well as into the futures trading room. So if you're interested, we also have some really great opportunities. If you want to get your feet wet, we have a 1-day pass and a 5-day pass. If you think that, hey, you don't want to make a commitment for the yearly or the monthly, we can provide this for you. We also provide coaching. We provide funding for if you don't want to risk your hard-earned cash. We provide funding for your trading. We provide trading education for futures, day trading, swing trading and investing, technical analysis. So pretty much everything that is trading. And I trade every single day. So you can find me in the trading room or on the private Twitter feed updating our swing trading members.
Okay, great. And that's a lot of stuff. So give Anka a call and get acquainted what she can do for you. Fausto, again, a little bit about what you can bring to the table. Obviously, there's a lot of unique things that you're doing. So just explain that again.
Yeah, sure. I'll just share my screen if you can. I'll just show them where to look. I'm just there you go. All right. Screen 2. Yeah, so basically if you go to CTU's website right here, Cyber Trading University, let's give you the link right there. And where's my chat? There we go.
I just posted it.
Oh, you just posted? Okay, great. So right there you could see we're basically doing a free webinar. It's coming up on January 12th, 12 o'clock. It will be recorded. If you do register, I will give you a copy of my book. You can go to Amazon, pay $47, or I'll give it to you for free. I'd rather you get it for free. I'd rather you guys learn and dish out money to Amazon. So there's a couple of videos. You can see there's a video of me on NASDAQ. If you want to learn a little bit more about NASDAQ Total View, how it basically works. But I'm going to cover basically how to find stocks, how we use level 3, how do we use level 4, how to basically find out which dominating market makers run certain stocks. If you like what I was showing you about the level 4, about how to follow orders, having a game plan, I'll show you how to basically do that in less than like a 40. Listen, I can teach you less than 10, 15 minutes. With that, then you'll be able to come into my trading room. Be happy to join us in there, and you could see all my instructors working with coaching, one-on-one coaching, have VIP passes, all that stuff. So I don't want to sit there and bore you too much. Just take your time, register it. If you can't make it, it's recorded. You can come next week. But like I said, if you want to know how to specifically learn how to day trade with a little bit of style of following orders, this is an opportunity for you.
Great. Okay, guys, thanks for being here. As far as optionprofessor.com is concerned, we do have a couple of PDF reports. One's on hedging, downside risk, and upside surprises, like we've seen in the last 48 hours. And also, we have a one-on-one hour-long session where you can ask questions of us, and we can help you with the things that you're looking at and be a sounding board. And obviously, we share the ideas we have as well. That's optionprofessor.com. Hey, Anka and Fausto, thank you very much for being here. This was a great meeting, and wish you guys have a great 2023, okay? And I'm going to send it back to David.
Thank you so much.
Thanks for having me.
All right. Yeah, great show today. Ton of good info. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast app. Also, you can just go to TimingResearch.com to get access to any of the shows or presentations there. Also, if you subscribe to anything on Substack, Timing Research, the updates are on Substack now too, so you can get updates on events and recordings and everything that way as well. So I just want to thank my guests again today, Fausto Pugliese of cybertradinguniversity.com. Great to have you back on the show today. And Anka Metcalf of tradeoutloud.com. Thank you for being here again. And the Option Professor of optionprofessor.com. Thanks, everyone.
Thank you so much, David, for having us.